Okay guys, let's start IFRS 8. It's about segment reporting, or you can say operating segment. We know business operates in different sectors, like if business has different types of products guys, and every product could be the segment of business. Then we know some businesses operate in different geographical regions. Every geographical region in which they are operating is actually, it could be your segment. So it's a geographical region, and if business you are doing different kinds of businesses, every business could be your segment. So different lines of operation could be your, a line of business could be your segment. Now guys, this is the standard about segment reporting. This says it requires the public listed companies to report in segments guys. What does it mean? It means if you are reporting in segments, it will help users of financial statements to understand the business more effectively and more efficiently. They came a good information through which they can analyze the company in a better way. So guys, what about segment reporting, how you should report about the segments and which segment should be reported or not. Okay, just assume that you have different types of products. You have different types of product, like you have around 1, 2, 3 and till 30 products. So business has 30 products, and then every product is their segment. So which product should be reported separately? The results of whether we have to show the information of each product, or we should show, obviously not all 30, we should show the material one. So there is a criteria which products you should report separately. So listen carefully guys. So identification of operating segment is the first criteria. First you need to identify an operating segment guys. What does it mean guys? If a segment will meet the definition of operating segment, then you are going to report them separately. Otherwise you are not going to report them separately. So what is the identification of operating segment? Operating segment has 3 characteristics guys. Every segment that has revenue earning business activities, it means you can say every segment which has its own income and which has its own expenses, it will be operating segment. If there is no income from one segment, you cannot report them separately in your financial statements. We are going to identify which segment should be reported separately and which segment should not be reported separately. If you want to report them separately, that segment will call reportable segment. But if you are not going to show them separately, obviously it's not a reportable segment. So in order to be a reportable segment must be an operating segment. It means for operating segments, it must meet the definition of operating segment, which has 3 criteria. If these criteria have met, we'll say it's an operating segment. And we know the product has its own income and expenses. Line of operations, if you are doing different kinds of business, every business has its own income and expenses. If you are operating in different geographical regions, it has income and expenses. The second is whose operating results are regularly reviewed by a chief operating decision maker to make decisions about resource allocation. So if you are allocating resources to your segments, it will be operating segment, otherwise not. Just take an example guys. Just assume that we have different kinds of businesses, we have different types of products, and we have different geographical regions. Just take an example that company is operating through 5 geographical regions and the company has 30 products. So remember, 5 geographical regions, and if the 5 geographical regions are there and 30 products are there, now we need to understand whether we should report products as a separate segment, or we should say that geographical region is a separate segment. Now if you want to learn that, for that you need to prove that product is the operating segment or geographical region is the operating segment. If your product is a operating segment, obviously the products will be reported separately, and we are not going to separate geographical regions. But if geographical regions are the operating segments, then we are going to show them separately, and we are not going to show the results of product. So first criteria is simple, that they should have income and expenses. The second is the resource allocation should be there. So if the business is allocating resources to the products, so when they prepare the budgets, they allocate resources to the products. It means the product is their operating segment. But if they are allocating resources to the geographical regions, then obviously geographical regions are their operating segment. So resource allocations should be there. It means the resource allocator is regularly reviewing their results in order to allocate the resources. Now the last thing should be that for which discrete financial information is available. It means in financial information should be available at discretion. At discretion, it means every kind of information could be gathered about the product or the geographical region. So once you have decided that you are what is operating segment, your product is operating segment, or your geographical region is an operating segment, then we have another thing, that is aggregation criteria. If you want to aggregate one or two segments, then you can do that. But if all the criteria have met, you can aggregate the 2 or 3 products. What does it mean, guys? It means if you have 30 products and you want to aggregate these 1 and 2 as a combined unit, and you want to aggregate 3rd and 4th as a 1 unit, and you are going to you want to aggregate 5, 6, 7 as a 1 unit, you can do that. It means you will not report ultimately 1 and 2 separately. You will consider them as a 1 unit, and you are going to report their results in the financial statements. Okay. So what is the aggregation criteria, guys? The nature of products and services should be same. So if segments are similar in respect of the nature of product and services, the nature of production process, the nature of regulatory environment which is being applied on those products, the type class of customers for their products or services are similar, the methods used to distribute their product and services are similar. So remember, nature of products, production processes, regulatory environment, customer base, and the distribution methods are similar. You can combine them, otherwise you cannot combine them. If the criteria have met, you can combine them. Just assume that first and second have met the criteria, so we have one product now, it's called 1. You can say them the second. 3rd and 4th didn't meet the criteria, so still they are separate. You are going to report them separately. Then 5, 6, 7 have met the criteria, so we are going to write them as a 5 as a single unit. There is no 6, 7 more. Now you have to combine the results of all 3 products. So guys, if you have aggregated the criteria, now for reportable, in order to be a reportable segment, they must have to met a quantitative criteria, a quantitative threshold. But what is important here, they have to meet only one criteria. If they will meet one criteria, we are going to report them separately. Otherwise, we are not going to report them separately, guys. So how they can, and what are the 3 criteria that they need to meet? And obviously not the 3, or not all the 3, only one criteria should be there. So for quantitative criteria, the first criteria is this, guys. The second criteria is this. This is the second criteria. And what is the third criteria, guys? This is third criteria. And do they need to understand all 3, guys? Yes, obviously we need to understand all 3, but do they need to meet all 3 criteria? The answer is no. They don't need to meet all the criteria. They just need to meet only one criteria, guys. So what is the first criteria? You will take the revenue of all business, the both revenue, external and internal. You are going to combine the both internal and external revenues. Okay, guys. Now, so we have a total revenue of the business, both internal and external combined is 310. You are going to take 10% of that revenue. If you are going to take 10% of that revenue, this 10% is fixed in the standard, guys. This is fixed. If this is fixed, guys, so what to do, guys? Okay, so we will have this 10% is fixed, guys. So we have a 31. This is your quantitative criteria You can also say it's a quantitative threshold. So this is the quantitative criteria, guys, or threshold. Now, if segments revenue, both external and internal, is more than or equal to 31, it will be a reportable, otherwise it will not be reported separately. Okay, so let's check. 200, it's more, reportable. 100, reportable. 5, 2 and 3 are not more than 31, so they are not reportable. Is that okay? Now guys, what does it mean 5 and static? It means in this segment they have combined the segment 5 and segment 6, and we know if the aggregation criteria have met, they can be aggregated. So he's just mentioning in the notes that 5 and 6 criteria products has been aggregated, and we are going to apply the criteria on the aggregated basis. If one criteria is not there, then you can check the second criteria, but we don't need to check the criteria for 1 and 2. 1 and 2 has met one criteria, so they are reportable. Whether they meet other criteria or not, they are reportable irrespective of the other criteria, guys. So just go to the other criteria. Now you need the total assets of business, guys. They are 364. These are the total assets. What is the total assets, guys? It is 364. You are going to multiply it with 10%, guys. If you are going to multiply it with 10%, again 10% is fixed in the standard. This is fixed in the standard, guys. So you'll have 36.4, guys. If you have 36.4, this is your quantitative criteria again. So this is a quantitative criteria. If this is the quantitative criteria, guys, what we need to do, this is important. Now again, if the segments assets, obviously the total assets, is more or equal to this amount, then it's a reportable segment. Just check. This is segment 1, only 10 assets. The assets are only 10, so not reportable. 2 reportable, 3 reportable, 4 and 5 are not reportable. Is that okay? It's brilliant. Now check which segments have already met the criteria. The one has met the criteria, second has met the criteria, and third also has met the criteria. Only one is needed, so we can report 3 segments. This is important. Now guys, if these 2 criteria have not been met, obviously the 4th and 5th segment has not met these criteria, then we'll check the 3rd criteria. In this criteria, guys, what you are going to do, this is the profit or loss of these segments. These were the assets of total assets of the segments. This was the total sales, both external and internal. Then guys, these are the profits or losses of the segments. So we have profit, we have a loss is in negative, profit is in positive. Now guys, what you need to do, you are going, look, we have different kinds of segments. The first segment is profitable, second is profitable, third is loss making, fourth is profitable, and fifth is also loss making. Now what you need to do, you are going to combine the losses and you are going to combine the assets. So first combine the profits. Look, these segments are making profits. So now you are going to combine the losses. This is loss, this is loss. Now we know the losses are 32, and what is the amount of profits, guys? Profit is 121. If you will combine 50 plus 70 plus 1, it will give you 121. Now you need to pick the higher, irrespective of negative positive, guys. If the loss is 121 and profit is 32, obviously the loss amount is more. So you are not going to take into account the negative positive. You will just consider an absolute amount. Absolute amount means only you are going to focus on digit, not the negative positive. Otherwise the loss will always be lower because it's in negative. So take whichever is the higher. So what is the higher, guys? What is the higher, guys? It is 121. So if 121 is the higher, what does it mean? It means you are going to apply 10% on this, and we know 10% is fixed in the whole standard. So this is your limit. If your profit or loss, I'm again repeating, if it's your profit or loss, irrespective of negative positive, only amount in absolute terms, if your profit or loss in absolute terms is more than or equal to 12.1, it will be reportable, otherwise it will not be reportable. Look, the 50 more than 12.1 is reportable, 70 more than 12.1 reportable, 30 irrespective of negative, positive. More than 12.1, it's a reportable. 4, not reportable. 5, not reportable. So the segments that have met the criteria is 1, 2, and 3. 4 and 5 doesn't met the criteria. So now what we are going to do, we are going to make a note in the financial statements, in the notes to the accounts. And how we are going to prepare a notes to the accounts? Look, how we are going to show a segment reporting, guys. This is important. So this is the note that you need to present in notes to the account related to segments. You are going to say that we have one segment, that is segment 1. Then we have another segment, that is segment 2. Then we have another segment, that is 3. And we know from our example that only 1, 2, and 3 has met the criteria of being reportable segments. Reportable means you need to report them separately. Then guys, what about others? Now you are going to pick others. So what is others, guys? It is 4, it is 5. So it could be many, guys, but I'm just taking this simple example. So 4 and 5 are other segments. Now you need to report them. So you need to disclose the information of these products separately in note to the accounts. This is what you need to do. So what information should be disclosed, we are going to discuss. But if you are doing this, it will help to understand the business to the users of financial statements, guys. So this was important. Now we have another criteria, and that is if the total look, these are the reportable segments. You need to understand this, guys. These are the reportable. These are reportable segments, and these two are not reportable. They are not being reported separately. They are others. They have many segments, like there is 6, 4, 7, 8, 9, 10, 11, 12 as well. So these are the reportable segments. Now standard says if you are reporting these segments separately, what you need to do, like just take an example that if you have a revenue. Now we are only talking about external revenue. This is not, if there is not internal. Okay, so only external revenue. So we have external revenue of, just assume it is 20, just assume it is 30, and just assume it is 30. It's an assumption, guys. Okay, these are the external revenues. Now what to do? In others, guys, we have only 20 in others. So what is the total, guys? So the total is, what is the total, guys? So the total is 20 plus 30 plus 30 plus 20, it's 100. So this is the note of segment reporting. You are going to report them separately. Now guys, there is a criteria. Standard says if you have started to report them separately, the 1, 2, and 3, they must be, their external revenues must be more than, their external revenue must be more than 75% of the total revenue. So total external revenue, you are going to multiply 75%. This is again fixed in the standard. So what is the criteria, guys? It's 75. So your reportable segments revenue must be more than 75. Okay. So check what is the amount, guys. The amount is 30, 30, 20. It is 80. So it's more than 75. This is the note that you are going to show. You will report 1, 2, and 3 as a separate segments, and the others will be combined as a separate. Now, what will happen if this is not an 80? Just take an example that this is not 80. Just assume that this is 20. If this is 20 and this is 30, so now the total is still 100. If the total is still 100, guys, so you will take 75% of this 100. This will make 75. Now your reportable segments revenue should be more than 75. But if you add them, it is only 70. So what we need to do, guys, we need to bring one more segment here. What does it mean? Now, because 75% criteria is not there, so we are not going to prepare a note of these segments only. We need to identify one or more segments from others. So just assume I'm bringing segment 4 separate. Now others are there. So if Now by bringing 4 here, if the revenue of these 4 segment is more than 75, it will be a note. If it's less than 75, you will bring the 5 as well. You will bring the 6, you will bring the 7. We have many segments in these others, guys. So this is how you are going to report them. So this is the 75% criteria, guys. Now what disclosure do you need to show? This is really important. You need to show the assets, guys. You need to show the profits, you need to show the losses, and you need to show each and every information that will be relevant to them. You are going to show the interest expenses, etc., guys. So these are the disclosures that you need to learn, that what disclosures are required about the segments. So it will help the users of financial statements to understand the business, and it will give a depth analysis of the business, so you can take their decisions more effectively. So this is all about IFRS 8, guys.